Hi traders, John Howell here. I know it's not Happy New Year yet, but I'm doing a bit of an early Happy New Year for you guys. What you're about to see is I've actually just compiled a whole bunch of free training to help you when it comes to your trading. You'll be able to see the timestamp because this is actually a really big training video, as you can see. And it walks you through the biggest mistakes you're making right now, walks you through chart reading strategies, walks you through, there's a whole bunch of stuff you can see I've actually put into these actual training as well too. I even walk you through a very simple chart pattern and strategy you can actually use today when the market and as the market continues to crash. So it's going to be a really, really, really good year, especially if you know how to use that type of strategy as well too. And also, guys, if you really enjoy this type of strategy, this type of trading as well too, and you need my help, then make sure you go to that trading. Make sure you click on that link in the description below. Go get access to a bonus free trading course. You're going to get access to some more training, some more. So not only going to get access to this complete free training here, but you're also going to get access to another brand new or another course that I used to sell. I'm going to give it to you for free. You're going to get more training there. And then also going to get access to a webinar where I'm actually running a 70% off to my coaching program. And I'm going to be running that as well too. So go get access to that, guys. Go join my coaching program. If you really need your help, then go do that right now. Because what ends up happening when it comes to my coaching, I normally open it up a few times a year, and this is probably the last time I'm going to open up this year for next year because it's a 12-month coaching program. I'm with you for a whole 12 months helping you out. So anyway, enjoy this entire massive free training. If you like this sort of stuff and you want more, then click on that link in the description below. Go get access to an even more in-depth training and stuff like that. I think in that other free course, it's something like 4 or 5 hours worth of training, and then also get access to a live webinar where I teach you my trading strategy and so on and so forth. So guys, enjoy this training and I'll see you real soon. Hey traders, John Howell here. Welcome to my free trading course that I'm going to give you right now. Now, there are two reasons why you're getting this. I just want to get this right out of the way. One, the very first reason why I'm giving away this free trading course is because I actually do want to help you. Even if you don't do any business with me at all, at least you've actually got this free trading course that's going to help you with the biggest mistakes, your chart reading mastery. I'm going to share with you my #1 traders. I'm going to give that to you for free, okay? So, but I'm also going to be honest with you. Well, the second reason why I'm actually giving this trading course away is because I want to provide value for first, but I'm doing this as a way of opening up some limited spots to my private inner circle coaching program. Now, here's just one success story that I've gotten over many just recently. He said I placed 13 trades, had 11 wins, 1 loss, 1 break even, and he had a 92% success rate. That's obviously from one of my inner circle coaching programs. So this is what I want you to do right now. This very first video that you're watching right now, I want you to watch it all the way through. Enjoy all the content, take lots of notes because it's going to really help you. Then I want you to click on that button below that says inner circle. It's going to take you over to the next page. That's going to share with you all the details about what goes into the coaching program. You're going to get more testimonials there, more feedback from what other people have said about the program, and you're going to see all the details there. So enjoy the free training right now, and I'll see you in the actual next free trading, the next part 2 of this trading course. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. And in this video, I'm going to walk you through the 13 or the top 13 biggest mistakes that most traders are making right now that's killing any chances of them being successful, so that you can stop yourself from making these mistakes, which will also lead you having to the shortcut or your shortcuts with your path of being successful. So let's actually talk about here. Mistake number 1, thinking it's the market. See, here's the thing, okay? Most people who are trading the markets, this is what happens. They try and trade a stock market trading system, and if it doesn't work, they'll say it wasn't for me. Then they'll try a Forex system, and if that doesn't work, well, then they'll try an option trading system. Then they'll try a CFD system. Then they'll try a futures trading system, and so on and so on and so on. And you might be in the same position right now, right? You might have tried all these different systems. Like, well, Forex wasn't for me. The E-minis wasn't for me. The stock market wasn't for me. The options wasn't for me. You might be in that position right now, and let me actually tell you how you can actually overcome this mistake. And it's actually around about a biggest myth that most people are buying into right now, which is actually stopping you from moving forward. Listen here. It's important that you're trading a trading system that is based on price action, because price action doesn't change, and therefore if you can trade one system and apply, and therefore what can happen is you can trade one system and apply it to any market out there.
And in this free video series, I'm going to give you a few trading systems that you can trade on any market. So keep an eye out for that coming in the next couple of, or in this free video series that I'm releasing over the next couple of weeks. You can actually see that I'm going to actually give you a trading system there. Okay, but what I'm trying to say here is this: is that if you can have a trading system, then I'm going to give you a few trading systems in this free video series I'm going to be giving you. Then what happens is that these trading systems you can actually trade just using price action alone. Okay, so you can see here, right? This is keyword here, price action. That is the absolute keyword there. And what happens is that the trading systems that I'm going to give you, all you need is price action. Now, if price action doesn't change from a forex chart to a futures chart to a stock chart to a bonds chart, okay, a chart is a chart is a chart. So if you can trade one system that is based on price action, that means you can trade the forex chart. That means you can trade the futures chart. That means you can trade the stock market chart. You can trade any chart. And if you want to wrap that around using things like CFDs, okay, or you want to use options, then you can. Does that make sense? I know it's a bit counterintuitive the way most people teach out there, but what I'm saying is that you can use one system on any market out there. It's no longer this is a forex system, this is a stock market system. No. What I'm going to teach you, I'm going to show you is how to apply one trading system to any market out there. I'm going to show you exactly how that works. Again, in the next few videos leading forward, I'm going to just show you that when it comes to the trading systems. Okay, so let's actually keep going through this. That's the mistake number one: is people thinking that is the actual market. It's not. It's you're not applying. You just don't have the correct trading systems, which is based on price action. Okay. Let's actually move forward here. Mistake number two, not being patient with the setups. You see, when trading, most people are trying to trade all the time, and every time they're in front of the charts, they're trying to force it instead of sitting back and waiting for the perfect setup. This is only going to cause you to go backwards because of the mistakes you will make, and basically it's not going to help you towards your success there. Okay, so what people do, they try to, what do they do? They try to rush it, right? They rush. They might be trading a daily system or an intraday system, and they're trying to force to get into the trade. See, my best trading setups and my best trading times are when I sit back and I'm waiting for the best setup to come to me instead of me trying to force it. Okay, so how do we actually overcome this mistake here, this mistake of being impatient? Okay, let's actually look at this. When you're trading your trading system, what you need to do is you need to find the perfect setup. Okay, so if you're trading any trading system out there, find the absolutely best, crystal clear, precise setup. Okay, and what you want to do is you want to print it out on a large piece of paper and stick it on the wall. So here's the thing after that. One, when trading, ask yourself, does this setup that I'm about to trade look like that one on the wall? And two, what does my gut say? And if they both say yes, then it's generally a pretty good trade to get into. But if they say no, then no matter how much you want to trade, you need to get up and do something else. Get away from the computer. Makes sense, right? So that's the best way to overcoming this. So many people, they want to continue trade, and you might be in that position right now, right? You might be just taking ugly setups, or trying to force the situation, or trying to get into trades that are just not they're just not perfect. And so therefore you get into it anyway, and you're like, oh well, I'm going to get into it anyway. Even though it meets most of my rules, doesn't mean all of them are still going to get into it. And that is the wrong thing to do, right? What you want to do is you want to be able to trade the most crystal clear, most highest probability setups, the perfect setups every single time. And this is going to see your profitability go higher. It's going to see your win-loss ratio go higher. It's going to see your confidence go higher. And it's going to allow you to actually it's going to allow you to put more money onto a trade, which is going to help you overall make more money. And it's going to be a compounding effect overall. Make sense? But if you're just taking these trades that are not absolutely perfect and absolutely waiting for these setups, then what you're doing is you're kicking yourself out of the markets. And listen, I understand if you're intraday trading right now and you're trading the E-minis or Forex and you're trading a 5-minute chart or a 10-minute chart or a tick chart or 1-minute chart, right? And you're looking for these setups, I understand, right? It's absolutely, it just kills you, right? Sometimes you got to sit there for hours and hours and hours on end and not take a trade. But trust me, when you sit there and you wait, and when you start to see a setup setting up, a trade setting up and you see this like, you know, right? You know, you look at the wall, so yeah, this is set up exactly like that. And your gut says, yes, this is the one, right? You've waited and waited and waited and you get onto that trade. Now, it doesn't mean you're going to make money on every single trade by doing that. It doesn't mean that, right? But what you're doing is you're giving yourself the best chance. And generally what's going to happen overall, you're going to be so much more relaxed. You're going to be so much more comfortable getting in the position, and everything's going to start compounding from there. I hope that makes sense, right? Let's continue here. I got 13 of these to go through, and I'm only on number 3. Not paper trading. This is another mistake here. Yes, I've been here before. I buy a trading system, I get excited, and I jump straight into live, real money trading. This always leads to making mistakes and sleepless nights. They never spend time paper trading before trading live because they're like, I want to make money now, right? And I know most of you don't want to hear this. Like, I don't want to paper trade. I want to just trade live. But do you know, actually, by doing this, because you're trying to rush into the markets, and because you're trying to rush into trading, guess what's happening? You're actually setting yourself back further and further and further. Because you're trying to rush it, right? And I tell you right now, if you try to rush anything in the market, you end up tripping over, and it's like you trying to go for a sprint, right? It's like you're going to go for a sprint, you know, or say you're going to go for a race, and you start the race and you go for a big sort of 100-meter sprint. And guess what happens? Well, you get there, you get your bag on, and your shoelace is not tied. But guess what happens? You're like, oh, quick! I've got to rush! Get into this! Quick! And you rush into it, and you don't tie your shoelace. You don't tie your shoelace. You're like, oh, I don't have time. I've got to quickly get this now. Right? You get in there and you sprint, and guess what happens? You trip over. And I know that's not likely to happen in a race because you're like, your shoelace is tied. But that's an analogy of what actually happened to the market, right? You quickly rush into it without preparing properly. You didn't actually, you didn't get your legs massaged, so you're not going to get any cramps. You didn't tie your shoelaces. Didn't do all these things before you actually went onto the track. Make sense? Before you start the race, you need to do all these things before you actually start to live trading, okay? So let's talk about how we overcome these mistakes. When you get into any system, you need to have the mental attitude that this is a process, like I said before about the racer, right? To not only understand this system, you're about to trade, but trading it successfully, okay? And part of the process is spending at least a few months paper trading and then moving up from there, which leads into the next biggest mistake, which is starting off too big. When you start trading, you're starting off too big. See, when most people start trading, they jump straight into with a large amounts of money per trade. And they say, I've got a pro showing me the trades, so why not just start big? Because, the bigger my positions, the bigger my positions size is, the more money I'm likely to make, right? Well, I'm telling you now is that's absolutely wrong. Let me tell you why. Here's what I found, and here's how you can actually overcome this mistake. Here's what I found. The smaller my trades are, the more money I make. No, I don't mean if you trade, say, $1, then to be expecting making a full-time income from the markets. That's not what I'm saying. But what I am saying here is you need to trade an amount that if you do have 1, 2, 3, 4, or even 5 losing trades in a row, that you would not care, right? You would not absolutely care. And the reason why is because your position size and your risk and money management size and all that sort of everything that's defined in there, it's not that big where it's going to make a big dent to your overall trading bank. Is it making sense so far? So trading in this size range, or this size range per trade, is going to allow you to stick to the plan, make less mistakes, okay? Because by trading this size, by trading this range here, it's going to allow you to stick to the plan. It's going to allow you to make less mistakes. It's going to allow you to let the trade run. You're going to cut your losses short, etc. You see, when trading too big, all the mistakes happen. And you've probably been there before, right? You start trading too big and you know that, hey, if I get a stop out on this trade, it's going to hurt. Well, guess what? When trading, the fact is you can't get every single trade right. That's an absolute fact. And you're going to have times, you're going to have periods where you're going to have 1, 2, 3, 4, or even 5 stop outs in a row. And that's just going to happen. Guess what? Get used to it, because that's called trading. It's how you manage those losses. right? It's how you manage those losses of how successful you're likely to be, right? So when trading too big, you're likely to make these mistakes more and more and more because you're trading too big, and now more emotions are coming into trading. When you're trading a position size where you can have 1, 2, or 3, or 4, or 5 losing trades in a row, then you're not really worried, then you can start to move forward in a big way, and that's how you actually start to become a successful trader. I'll give you a quick story. A while ago, I was actually running an auto trader, meaning that I was actually trading basically on other people's accounts. I traded my account, and I had hundreds of thousands of dollars of other people's money where they were basically taking the same position automatically. Okay, so I was effectively trading their accounts for them, right? And when I started the auto trader, I think my first 4 or 5 trades were actually losers. For the first 5 trades, they were actually losers. But here was the thing. Because I had everything under control, where I had good trade management, had good risk management, had good money management, and everything was good there. All those 1, 2, 3, 4, even the 5th loss, it wasn't actually a big dent on the account because I kept my losses small, right? I wasn't a big dent on the account, and all the auto trade, I didn't get one little email saying I suck as a trader and blah blah blah. Why? Because even though I had 5 losing trades in a row, I made sure I kept those losses small, right? And I just kept sticking to the plan, And guess what? The very next trade I made, I let the actual trade run, and it recouped most of the losses. The next trade after that was also a profit, and boom, we're back in the green again. So I had 5 losing trades in a row, and then all I needed was 2 winning trades, and I was back in the green, well back in the green, okay? But by the account being up by 2 or 3%, from memory. So what I'm trying to say there is that if you start to trade big, and you start to have 1, 2, 3, 4, and 5 losses, 1, it's going to be a big damage to your account. 2, it's going to be a big damage to your confidence. 3, it's going to be a big damage to your overall approach to the market. And now you start to you're likely not stepping up when you should, and all these mistakes happen. Does this make sense? I hope you can see this, guys. I'm truly trying to help you out here when trying to trade. Don't try and trade big amounts, okay? Because it's not going to help you at all. And I'll talk about that in one of the other mistakes I'll talk about here, okay? And I'll talk more about position sizes and how to actually escalate that in another mistake moving forward. But first, let's actually talk about this one here, number 5. Not having a trading style fit into your lifestyle. This is a big one. And guess what? I've been here before, right? When I had my cancer story and stuff like that, and I'll talk about my cancer and basically my 10 years of trading experience and what's actually happened over that time. I'll talk about that in a minute. But let's actually get through these mistakes first, okay? So when most people start trading, they look at the type of trading that's going to make them the most money. And they do that, and most of the time, it's the Forex trading or E-mini trading, right? Because you see this like intraday trading. And then you end up all night or all day in front of your computer, and everything else gets thrown out the window, your health, family, etc., okay? And the point I'm trying to say here is that is not long-term successful or long-term sustainable. And I've been here before, right? And again, I'll talk about that in a minute. But I've been there before. I've been in a situation before where I've been trading all day and all night and stuff like that. And that's how I got cancer. That's how when the doctor said I had 6 months to live, and that's how my relationships got out of control. I didn't spend time with my kids, and I was very unhappy, even though I was making good money, $30,000 per month from the market and stuff like that. Makes sense? So it's important to actually be able to have a trading style that's going to fit into your lifestyle. So let's talk about how we can overcome this mistake. What you need to do is you make sure that when you're trading, when you're looking at a trading style, that you can actually fit everything else in as well too. I mean, exercise, family times, holidays, etc., and it not affect your income. I'll give you an example. A little while ago, I actually went to Las Vegas, and while I was at Las Vegas, I spent 2 weeks at Las Vegas, and that month, while I was in Las Vegas, I made close to $80,000 from being involved in the markets. So here I was spending 2 weeks out of a whole month at Las Vegas, and I made close to $80,000. How did I actually enjoy my time in Las Vegas and have good time in Las Vegas, still be able to make really good money like that? It was because I had my trading style fit into my lifestyle, where my trading only took around 30 minutes per day. So I could spend 30 minutes per day, do my trading, and continue doing that, and still make good money. Make sense? So trust me, guys. I'm a guy that actually trades as well. I'm actually quite a big trader. Okay. So let's actually talk about this thing here. Number 6 here, which we touched on this a little while ago, but let's actually talk about this. Not understanding the 3 management areas. You see, 90% of plus of most traders, or most traders' time is spent on trading the systems and not focusing, basically focusing on making as much money as they can, and they totally not focus on these areas which can make or break you. Now, let me actually tell you what I'm talking about here. When overcoming these three measures, it's important here. It's important to spend time and focus on getting better at not only understanding these 3 areas, but implementing them into your trading system. You see, you have a trading system, and then these 3 areas help you minimize risk and loss, and also help you increase your reward. These 3 areas are risk management, or risk, money, and trade management. And also in this free video series that I'm going to be giving you moving forward in this basically free video series, I'm actually going to devote one video very soon to just this one topic. So make sure you keep an eye out for that. And I also know a lot of people are really into that. And I'm also going to be adding a few other mindset techniques as well to that video as well too. Okay, so make sure you keep an eye out for that. Make sure you keep your eye on the emails that I'm sending out, because you'll be able to make sure you get those and understand the 3 areas of management, okay? But this whole biggest mistake here is just so you understand what's going on there. Mistake number 7, let's focus here. Focusing too much on indicators. You see, this is one of the mistakes that I was making only up to a few years ago, but most people using indicators in their trading systems to trade, and they say, well, this is, and so on, right? So what happens is they focus so much on what the indicators are saying, and they forget most other things that they're saying there. So like, okay, well, because the trading indicator is saying this, I'm going to do this, and so on and so on. Make sense? So let's actually talk about this here. I'm not saying using indicators is bad, but it's important that most, like 90% of your trading decisions must come from the price action, and then using indicators to confirm it. Here's the facts. I used to trade with indicators, but I realized that they kept me out of some really good trades. Since I don't trade with indicators anymore at all, okay? When I trade, I simply trade with a blank chart. That's all I trade with. At all. My trading is a lot simpler, and my profits have actually gone up. And also in this free video series, I'm going to show you a few simple trading systems that you can use on any market that don't use indicators. So make sure you keep an eye for that, okay? Again, in this free, as I said before, I have a massive amount of education to give you in this free video series. And I'm also going to give you a few different trading systems that you can trade on any market that don't require indicators. Wait till you see that. You're going to absolutely love it. So keep an eye out for the emails for the next free videos for that as well too, okay? Mistake number 8, setting goals too high at the start. See, most people when starting out trading, they say, my goal is to make $8,000 per month. And when they've made no real consistent money from the markets, and this causes them to trade too big, too much, which only causes them to lose money overall. So how do we actually overcome this? How do we actually overcome wanting to set too high or too of a goal? Okay. Let's actually talk about this here. Yes, your long-term goal might be, say, $8,000, but start with a goal that's, say, making only $80 per month for 3 months straight, okay? So let me explain here. Most people are saying $80 per month. I'm here, John, I'm here to make good money. Okay, I understand that, right? But it's an overall process. Start with $80 per month for the next 3 months, and just set that as a goal for $80 per month. Because I'm telling you right now, if you can't make $80 per month straight, you can't do $8,000 per month straight, all right? Trading this small will also get you in the habit of doing the right things at the right time, right? And see, once you're doing $80 profit for the next few months, then don't do anything different. Keep doing the exact same thing, but then just bump it up to, say, a little bit more contracts on per trade, and now you're doing $800 per month for the next few months. And then once you're doing that, bump it up even more, so now you start to make $8,000 per month. Can you see the progression there? Right? If you start doing $80 and $800 and $8,000, you're naturally progressing into the higher contracts. But don't start. Remember I said before, one of the mistakes is trading too much. Trading too much and trying to make $8,000 per month straight away is going to do your head in, right? It's like the race, right? It's like the race. The racer doesn't get to the field just with your clothes on, with not preparing at all, right? And then does the 100-meter sprint. What does he do? He does his exercises, he does his warm-ups, he does his stretches, he gets his massage, he does all that sort of stuff. That's basically his pre-track race, right? And it might take him 6 months, might take him 12 months to prepare for that 100-meter sprint. This is the exact same thing, right? You're preparing for the $8,000 target, the $80 per month straight, onto the $800 per month, and then build it up from there. Because I promise you this, right? Once you know you can do $80 per month straight and you do nothing different, you start bumping up to $80 per month straight, and you do that for 3 or 4 months straight. You're doing $800 per month. I promise you that going from $800 per month to $8,000 per month is a piece of cake. All you have to do is just bump up the contracts, and then you're now making $8,000 per month, right? Doing the exact same thing, not trading any more time. And if you've got a good trading style that's fit into your lifestyle, and they make $800 per month, and not trading any more time, guess what? Bump up the contracts. Now you're making $8,000 per month. And then once you're doing $8,000 per month, remember I said before, right? While I was in Las Vegas, I made $80,000 in 1 month, and half that time I was in Las Vegas. Well, no, I'm not suggesting that you can do $80,000 per month. But 10 years ago, I started off with goal here. I started off by $80. Then I went to 800, and then I went to 8,000, and then I went to 16,000, and I went to 30,000. I've actually built it up from there to making $80,000 in 1 single month, right? So that's the natural progression if you wanna continue moving forward there. Okay, let's move on here. Mistake number 9: not being flexible with the market. See, when most people trade the markets, they get into a trade in the hopes that the trade will go in the right direction, either up or down. When they get into the trade, they find as many things as they can, all right? As many things as they can, and make up as many stories why it's going to go into that right direction. And if it doesn't move in that right direction, the more stories come out, trend lines come out, etc. All these things come out, right? And before you know it, which was a small loss has turned into a massive trade that blows you out of the market. And you've probably been there before, right? You have a set of rules, you get in, and then suddenly it goes against you because you're so set on that thing going up or going down depending on your direction. Just say you want the market to go up, right? You're so certain on this market going up, and the market did keep going up, the market did go up. You're so focused on the market going up, and what happens is the market the market didn't go up, right? Market went down, but because you're so certain on this market going up, you weren't flexible with the market. Then you say, no, this thing's got to go up. And all these stories, you start looking at different time frames, start bringing in indicators, you start drawing trend lines, you start saying all the support here, and all these things, right? Which only is keeping you into a trade which you know you shouldn't be, and those turn into what we call a pain in the neck. I remember after blowing myself out of the market the first couple of years and coming back, I had a $5,000 trading account, and doing this one simple thing, right, this one mistake actually blew up about 50-60% of my account in one night. Yes, it happens to a lot of us, right? But how do we actually overcome this mistake? Here, we talk about this here. Every trade you get into, accept that it can and it could be a loser. Have a level where you're getting out for profit and loss no matter what, and stick to it. Don't add other rules or stories in to keep you in. You won't get every trade right. So once you get stopped out, it's important to keep the losses small and the profits big. Remember I was telling you before about the auto trader, right? The auto trader thing was I kept the losses small and I kept the profits big. And guess what? It's the key, as saying here, right? It is the key. Let me draw here. It is the key to long-term successful trading, and that is the absolutely key. Keep your losses small, all right? Keep your losses small, keep your profits big, and don't make excuses or don't add stories of why you should be in the market. Get in there, have a set of rules, and start to move up from there. Okay, let's continue here. Mistake number 10: too much on the charts, on too many colors. Let's have a look at this chart here as an example, right? And this, I know some of you guys are trading like this. Some of my private clients are showing me charts like this. And this is actually one of the charts they showed me. And I'm like, no, you shouldn't be doing this. Just think about this as a simple point of view here, okay? So just think about this here. When we're trying to trade, right? When we're trying to trade, we're trying to make a decision on a trading position. And just think of it, our eyes and our brain is a machine, right? And if we're trying to take in every bit of thing that's on this chart, let's have a look at this here, right? We're trying to take in, if this was your chart here, you're trying to take in these lines here, the support resistance lines. You're trying to take in these diagonal lines through here. You're trying to take in the red and green, the green and red bars. You're trying to take in the moving averages. You're trying to take in the green colors here. You're trying to take in the blue background. You're trying to take in these white bars. You're trying to take in, now you might not see that, right? You don't want to see that, but guess what's happening? That's exactly what your brain's taking in, right? Your brain is taking in all this information to try to make a decision. No wonder most people get confused when they're trying to trade, right? Because they've got all this here, so much going on, right? So it's important when we're trading that we keep it as simple as possible. So instead of having a chart that looks like this, have a chart that looks like this. Quite different, right? Remember I said before that my trading style right now, after 10 years, my trading style is actually what you see right now. What do we have here? We have a white background. So the brain doesn't actually have to take that in, right? It doesn't have to take in white background because it's not another color, right? So that's one thing. What also do I have here? I only have the exact same colored bars. So the bars are not different colors. Now this might not seem a lot, but when we're actually trying to read the price action here, we're trying to read the highs, we're trying to read the strength, we're trying to read the exhaustion, we're trying to read the power turns, we're trying to read all these different things, which you will learn moving forward, right? You're trying to learn, all these different things, and what we're trying to do is we're trying to read what the market is telling us. Then the less things on the chart, the better, right? So what we have here, right, is just an axle down here, an axle down here, a white chart and a black background. Now let me actually ask you a question here. If you're trying to read the market, right, you try to understand what the market is telling you, which one do you think is going to be easier and for you to come up with a decision much quicker of what the market is doing? This chart here or this chart here? Well, this chart here, right? Obviously. And here's what one of my millionaire mentors have told me and my coaches have told me. That the quicker we can get and make a decision on what the chart is telling you, whether it's a trade or not, and the quicker we can move on, the less time we actually have to make a story. Makes sense, right? So many people can sit in front of a chart for hours and hours and try to make up a story of why there should be in a trade. But if you can come up with a process of making a decision really, really quickly and move on, that's going to give you less time of making up something that's not really there. Make sense? That's mistake number 10. Mistake number 11, not checking the higher time frame. And this is a big one, okay? Let's have a look at this. Let's have a look at this chart here for a minute. Let's just say, for example, you're trading this chart, and what we're looking at right now is we're looking at a 5-minute chart. And we're just trading this 5-minute chart. Some people do trade the 5-minute chart. But look at this here. What we notice is that you might be in a trade, right? And the market went up to there and it actually stopped and it backed off. You're like, how come the market started to back off quite significantly? You can see here, right? That what happened is the market took off. It had a bit of a pullback. The market took off, and then it really started to step back here, right? And what that showed, right, is up here was a lot of forcing power of the selling, right? And if you're just trading the 5-minute chart, like you see up here, the 5-minute chart, if you're just trading the 5-minute chart, that's all you see. Like, hang on, how come that stopped there? And so, but what you don't see is the bigger picture. So what we need to do is we need to be checking the higher time frame. You're trading the 5-minute chart, then we need to check the hourly chart. And this is the hourly chart here. You can see this is the hourly chart. And this point right here was the exhaustion point on the 5-minute chart, right? But what you didn't see is what you can see on the hourly chart is there was also a major resistance level, and the market is actually getting up to a level of major resistance where the market is likely to stall and also back off a bit, where it's going to struggle to get into, right? But looking at the 5-minute chart, you couldn't see that. All you could see is just what's there. Makes sense, right? So just by looking at the high time frame chart, you were well aware that, hey, this market is likely to stall and even back off a little bit here because we're running into a major area of resistance. So it's important when trading, lining up 2 time frames. Your time frame that you're trading, and this is a 5-minute chart here, and lining up the other time frame chart, which is an hourly chart. Now for me, when I'm trading, I like to trade the daily chart and look at the weekly chart for the bigger time frame, right? Setting the parameters. And again, in this free video series, I'm going to walk you through exactly properly how to set this up properly and how to read the longer term time frame chart, such as the hourly chart or the weekly chart, so you know exactly when you're trading your trading time frame, such as this chart here, then you know exactly how to read it properly. Anyway, I'll talk more about that in the next few videos when I release it, okay? But let's have a look at this here. What we need to do is need to have them side by side so we can clearly see if we're trading, right? We can see that this point right here is this point right here on the hourly chart. And if we're looking at the 5-minute chart, looking at the daily chart, we know if we're in a trade, okay? If we are in a trade, let's do this. If we're in a trade and actually, let's go back to there. If we're in a trade, then we know that, hang on, this overall major resistance level here, this overall level of resistance is likely to stop the market, right? So if we can see this overall resistance level here is likely to stop the market, and you can see, okay, it's getting up to this position right now, then if you're in a trade right here, and just say the market started taking off and you started getting the position right here, and the market took off and it started getting up to here. Well, guess what? You now know, right? You now know, hang on a minute, this overall level here is the exact same level of resistance, and we're likely to get into we're getting into what we call a higher time frame resistance. Now, let me ask you a question: what is stronger, a 5-minute support or resistance, or an hourly chart support or resistance? Of course, the hourly chart and support resistance. So when we're trading the smaller time frame chart, all right, if we're trading the smaller time frame chart, then what we need to do is we need to make sure we keep an eye on the longer term time frame chart. And for you guys, or for me, what I have to do is, like, this is a daily chart for me, which is the time frame I'm trading, and then I use the weekly to have the parameters of what I'm looking for. And again, I'll walk you through. I'm going to devote one video to walk you through exactly how to define the parameters of when you're actually trading. Okay, but let's actually continue here. Are you guys enjoying this? Are you guys writing down a lot of stuff here? Cool. As you can see, I'm really trying to add a lot of value to your trading, so you can actually really help you and really understand these mistakes. Let's continue in. Mistake number 12, trading in a fearful state. You see, we've all been here before, right? But the times when you open the chart after having 2 or 3 losing trades in a row, and you're fearful of having another losing trade, or you've been trading intraday and you've been taking, say, 10 trades that day or night, and your account is down. All you want to do is get your account back to break even. And you're probably saying, yes, Sean, I've been there before, right? You're trading heaps. And then what happens is you're down for the day or you're down for the week. You're like, all I would wish to do is just get my account back to break even, right? And all I say is that this turns out to be the worst thing that you can start to think about, because now you start to, in some of the mistakes, what happens? You start to force things, right? And then this starts to lead to mistakes a lot of happening. When you start to force things, you start to lead to a lot of mistakes, which equals you going to bed in tears, right? I've been here before, and I've been there before. I understand that whole thing there, right? Trading in a fearful state. So how do we actually overcome this mistake? Well, when trading, you need to learn how to read what your body is telling you. And this is one of the biggest things you need to learn. Always ask yourself, what sort of state am I in at the moment? When you're trading, this is important to do when you're trading, okay? Then with an honest answer, move forward. If you're in a fearful state, then the best thing to do is stop. Even if you're down in your trading on that day or that week, stop, walk away from the computer, do some exercise, play with the dog, anything. Then a few days later, come back with a clear mind. This is going to stop you from going into what we call a devastating effect on your account. Remember I said before, when I blew up myself the first couple of years, and then I came back with a $5,000 account, and then what happened? I blew it up. I blew up 56% of it in one night. What did I do? I was doing the exact same thing, right? I was trading too much, and then I started making a lot of mistakes. I started forcing things, and I made things even worse when trading, okay? This is a big thing. And no matter what, if you trade the daily chart, whatever, if you start trading in a fearful state, you start to attract what you fear, right? And this actually happens in life. You start to fear a lot of things. Whatever you focus on actually expands. If you focus on not being able to get your account back to break even, or you start to fear this, then it's actually like to happen. Whatever you start to fear, you like to attract. So if you're fearing your account going down even more, or you just want to get back to break even, then get out of there and stop it, right? You need to break the pattern. You need to get out of it, okay? Mistake number 13, focus only on education and not getting coaching. My first years in the market, I was $250,000 in debt and facing bankruptcy. I was not doing well at all. Well, I can laugh about it now, okay? But I was just focused on getting education only, but not coaching. And most people watching this video are probably in the same place, right? You just focus on the education. You focus on the trading room. You focus on the trading indicator. You focus on all these different things. but you're not focused on coaching here. Well, let's talk about how to overcome this. The fact is, no matter what education you have, nothing will replace a coach, right? All major successful people have a coach. I have a coach. I spend tens of thousands of dollars per year, even $100,000 per year. And after 2 years of not doing well myself, I got a coach, and then it took off from there. You see, a coach can see all your mistakes and fix them on the spot. That's why most of my investment that I do goes into trading, and that's in the trading, is spent on getting coaching. You see, I get coaching from guys that are doing millions of dollars. Why? Because I can't actually see the mistakes that I'm doing personally. If I'm doing something, I just can't see that. Right? You know yourself, right? You can notice other people's mistakes, but you can't notice your mistakes. But by having a coach here, it's not going to give you, it's not going to help you stay on the right track by just focusing on the right things, by keeping you centered, by keeping you in a good state, but doing all these things is going to help you. But it's also going to start noticing that, you're going to notice these mistakes, and you're going to be moving forward. Okay, if you're not getting the coaching, then you're missing out on a big piece of the puzzle here.
Hey traders, welcome to today's free training. You're going to absolutely love what I've got planned for you today. But I want to share with you a success story from one of my Inner Circle coaching program. Here, you can actually see all the details on the page here, so I won't take up too much of your time. But you can see here that he started at $30,000, and his account now is up at $230,000. Now he was with me for over 1 year in my Inner Circle coaching program. But you can see here, this is just an email that I got just recently about what actually goes on and what he did and so on and so forth. So enjoy today's free training, and if you like what you see, click on that Inner Circle button below, go over to the next page, check it all out, and if it's for you, take up one of those limited spots I've got available for my Inner Circle coaching program. Enjoy the free training right now, and then go check out the Inner Circle. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, so let's actually talk about this most powerful trading technique that I use, and it's been something that's made a massive difference to my trading and the success in my trading. And one of the biggest things for us, right? We want to be able to do whatever we can to stack the odds on our side even more, right? So to have a really good win-loss ratio, but we also want to have the probability of, when we do have successful trades, we want to try to maximize our profits and also cut our losses short. So this number one thing that I use on every single time I'm getting involved in markets is simple, basic, but powerful, what I call trend analysis in the markets. And it surprises me so much after all this time, my trading, and also doing coaching as well too, how many people know this or maybe not understand it, but they may even understand it, but they simply just disregard it and completely focus on all this other stuff out there, which is all these indicators and the commitment to traders report and the fundamentals and the inflation data and all this sort of stuff. But as a trader, right, as a trader in the markets, the number one thing that we must understand is reading the markets itself. And from just doing this one thing, it helps you stay on top of the market of, like, then, are we still in a bull market? Are we in a bear market? Who are the buyers in control? Are we still in an upward trend? Or maybe no one's in control, it's just going sideways. Or maybe there's a bear market likely to start. And so this is one of the major things that has helped me do so well from trading, and what's helped me be so successful out of trading is simple, basic, but simple trend analysis. So let's actually walk through this here. In a bull market, what you will see on the charts, and we'll go to the live chart in just a minute. But in the bull market, what we tend to see is the market rally up. So it might do something like this, like that, and then we'll get a pullback, and then we'll get a rally up like that, and then we might get a bit of a pullback like this here, and then we'll rally back up again. And as you can see, the market is making higher lows and higher highs. But the most important part to this upward trend is the higher low. As long as the market keeps making these like that, like that, as long as the market keeps making higher lows, then the bull trend, the bull market is still intact. Now, one thing that a lot of people get wrong is they focus too much on this. Just because we have these pullbacks in the market, and pullbacks in the markets, just because we're getting a pullback in the market, they think, oh, the trend's over, the sellers are now in control, and now we're going to crash and we're going to go down and it's all over. That is the wrong thing to do, because what happens a lot of the times is, as you can see, the market makes a high low, we rally up, we just get a pullback, and that's the way the markets work. So if we're in a bull market and we get a pullback, there's a high probability, probably 80% of the time, the market's going to continue that trend. That's why most people who call the top, and I'm not going to put names here, they're wrong, 98% of the time. Why? Because as long as the market keeps making these higher lows and higher lows, the market is in an upward trend and the bull market is continuing. It's not until we actually start to not make higher lows that's when we can start to see a potential reversal. So make sure you watch out. I think it's not tomorrow, but the next day. I'm going to talk about the powerful reversal method, and I'm going to talk to you about how to identify tops and bottoms in the market. So keep an eye out for that. So this is a bull market, and this is where most people go wrong. So in a downward market, in a downward phase, we generally get this here, right? Down, we get a pullback, we get a lower high, down, pullback, lower high, down, pullback, lower highs. And so as you can see, the market is making lower highs and lower lows in the market. But the most important part to this trend is, as long as the market makes lower highs, the sellers keep knocking it down, knocking it down, knocking it down. As well as the upward trend, you can see in an upward trend, as long as we're making higher lows, that's the most important part to an upward trend. In a downward trend, the most important part is a lower high. Let's do this here. Is a lower high and a lower high and a lower high. As long as the market keeps making lower highs, then now we're in a downward trend and the sellers are in control overall. And now on the flip side, one of the biggest mistakes that most traders make is they focus on these pullbacks through here. Here's the market pulling back against the downward trend, a bit of a pullback against the downward trend, a bit of a pullback against the downward trend. And they focus so much on the pullbacks, but they're not looking at the bigger picture enough to see, oh, look, the market is pulling back, but look what happened. We dropped down. Now we're having a pullback. And this pullback here, this may even last 2 to 4 weeks, as the market slowly pulls back. But the overall underlying trend is knocking it down, knocking it down, knocking it down. And the market is going in a downward trend. And it's so surprising that most people don't focus on this enough, because it's the one thing to help you identify good entry points, but also to help you identify, just because we are rallying right now, there's probably a really good chance that the sellers are going to come back in and go for another, what I call another drop, right? So you can see here, market comes back down and then drops back down, rallies back down, and we drop back down, and then we drop back down. And so here is the basic simple analysis of this move. As I said before, let's quickly recap here, and then we'll go over to the actual live charts, and then we'll actually use this as an example here. But in an upward trend, we have higher highs and higher lows. But the most important part is a higher low. As long as the market's making higher lows, then the market is in an upward trend, and the bulls, it's in a bull trend. The bulls, it's an upward trend. The buyers are now in control because they're just stair-stepping it up. In a downward trend, the most important part to you as a trader is making lower highs, and lower highs, which is a downward trend in the market. So let's actually go to the live market, to the live charts right now, and then I'll share with you exactly. We'll identify this in the live market so you can actually see it as well too. Now, what we're looking at right now is simply a chart. Now, it doesn't matter whether it's a weekly chart or daily charts or an hourly chart. You use the same formation and the same analysis. Now, there's a few things here really, really important. The reason why I wanted to use this chart as an example, that's really important to understand when identifying these highs and lows. So we're looking at this particular chart here, and we can see, notice how on this particular chart here, notice how if I draw the trend, notice how we have like a little higher low here and a little higher low and a little high. See these little higher lows all through here? Well, that's what I call little or non-significant higher lows. Notice how we have these big swings up, big swings down, big swings up, and then the market goes up, 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 up. Notice how we have these much more major swings. That's what I call the major highs and lows, and they're the ones we want to be focusing on, not when the market does this, but when the market does this and like that, we would say that was the low, and then that was the last significant low. So that's the one I'm going to be calculating as I'm identifying the simple trend analysis in these markets. Make sense? So let's have a look at this here. So it's not these lows. So if I'm going to be drawing the highs and lows in this particular market here, and so if I'm going to be drawing that, this is how I would identify it. I'll be drawing from the low to the major high, to the major low, the major high, major low. As you can see, right, that was we had these small little highs and lows, but we didn't really count. This major low here, big swing up, we had a swing down, we came down, we made a big swing up, big swing down, big swing up, and now look what's happening right now. Even on this particular chart here, we're swinging up. So if we have a look at this particular chart here, we're noticing that now this is a daily chart of a particular stock, and it doesn't matter if it's a forex market or crypto market, they all operate the same way, right? There's the same humans and same machines pushing across all different markets out there. But look what's happening here. We had this low, and then we have a higher low. The market pulls back. Look here, we create a significant higher low. Now it's very, very close to making it a double bottom, but it didn't. It made a higher low. Remember, in an upward trend, the most important part is a higher low. And then we have a higher low, and then we have a higher low, and then we have a higher low as well too. So as you can see, throughout this point in time, all through here, the market was making highs and higher lows. So the buyers continued, and still to this day are in control. They have never lost control in the market. So if I take everything off the screen, as I was saying before, one of the big mistakes that a lot of people do is I'm zooming in right now, is they do that, right? They're zooming in, and they may only look at the last sort of this. Once again, this is a daily chart. They may look at the last sort of maybe week or 2 weeks, and they sort of get worried. So they may only focus on, if you're zoomed in too much, like here, then on this period, on this downward phase through here, you're like, oh my goodness, the top's in, the market's crashing, oh my goodness. And then the market rallies back up, and then, oh my goodness, the market's getting smashed. But one of the most important parts to a trend analysis is seeing it from the overall picture. This is too close. If we take everything off the screen and we zoom out a bit to get a lot more data, which one is it, data or data? I don't know. Right? And we squeeze it up like this, look what we can see here on this particular chart. We can see that once again, the market has continued low, higher low, and these pullbacks here are just simply a nice, healthy pullbacks in a nice, big bull market. And the buyers have continued to stay in control, because even though we get these pullbacks, the buyers have been in control ever since. All right, so let's have a look at now from a bearish perspective, looking at a bearish trend and the most important parts to identifying in a bearish market. Now I've used this one as the example because it's a lot more messier, but again, I'll be able to share with you exactly how to see it. So initially, what did we have back here? We had what? We actually had a very nice upward trend, didn't we? You can see how we actually were starting through here. We actually ran up, and we came back down, and we ran up. So notice how the buyers were in control here, right? Higher lows, and the market ran up, and then the market came back down. But notice how we ran down, and then we ran back up. Notice how we had a higher low and a higher low, right? So same for the bullish trend, highs and lows. But look what happened here. Look where the market changed. It rallied down, and notice how we're now breaking this low. So we're no longer making higher lows. Higher low, higher low. What is this? This is now what? A lower low, but also we created what? A lower high. So notice how the trend has started to change here. This is where the overall trend change. And again, not tomorrow's video, but the video after that, the trading after that, I'm going to really, really help you when it comes to reversal points. And there's a bit of a hint there. And I'll walk you through more of that in a couple of days from now. But as you can see, right, now we actually dropped, and now we're in what? A downward phase, and then the market rallies back up, and then we rip. And then we rally back up to create a double top. We didn't break a low, and then we ripped down again. And then we rallied back up again, and then we ripped down again, and now we rallied back up again. So as you can see, just by looking at this particular market, and again, I wanted to use this because you can see it from a bullish trend, and then now into a bearish trend. As I'm looking at this chart, we can see we had a low, lower high, a double top. We didn't break the low, we didn't break the high, so therefore the sellers are still in control, but they're holding on here. Then it drops back down, rallies back up. Look at this here, lower high, rally down, and then away we go. So as looking at this particular chart, you can see how we went from a nice bullish trend, and then now we went down through a bearish trend. And this is actually just watching the market to see, okay, who's in control. We've got bulls, we've got bears, and focusing on that. And going through this here is one of the most important things, because if we can see the markets in a bullish trend, as an example, and we are getting a pullback, well, then we know in the back of our mind there's a really good chance that the buyers are going to kick back in again to continue the upward trend. Same here, right? We had the market coming down. So we had the market rallying down, rally back up, rally down, rally back up, rally down, rally back up. So as you're getting these pullbacks, you could be keeping in mind, like, hang on a minute, yes, we are getting a 2 to 4 week sort of rally, short-term rally here, but the market's still in this overall downward trend, and just by looking at the charts. So the last thing I want to, again, I hope you enjoyed this here. Make sure you watch this video a few times if you have to. But the last thing I really want to sort of help you with is take everything off the screen. You don't look at your indicators, the volume. You want to remove, most people have grid lines. Notice how people have grid lines like this, and they have we have grid lines like this through here, like that. Right, we have all these grids, and then you have the code right here. Notice how it looks really, really messy. If I take everything off the screen again here, look what's going on. I have noticed how that I've actually made the chart very, very clear. So I've taken the horizontal and the vertical grid lines off. I've taken the code off this here, and I've just have the open, highlight, close, or it could be candlesticks. It doesn't really matter, but just make sure that they're black, because we don't want red and green here. We just want to focus on what? We want to focus on the trend, who's in control, and we want to focus on, okay, this is what the market is doing through here, and we want to make sure we're focusing on what? The major highs and lows in the markets, because it's the major highs and lows in the markets, not these short-term rips and drops and rips and so on and so forth that are important. It's the overall flow, which is lows and highs, and are we in an upward trend? Or are we in a downward trend? Or sometimes we can simply go through a sideways phase. And here is a great example of what we call a sideways phase, where there's no one in control. We're not in a bull market, which is making high lows breaking past previous highs, which is this, highs and lows breaking past previous highs. Or we're not making downward phase, a lower low breaking past previous lows. We're not doing that. So in this case, in this example, there's no one in control. Yes, we did have a movement up through here, and then you can see we had this movement through here. We went sideways, but it really rallied up from there to there. You can see how we had a bit of a pullback here, a rallied up, then we had a pullback, which is a double bottom. Now look what happened here. Notice how we had a double bottom, but we just started doing what? We just started going sideways. Notice how when we're not really doing much through here, right? Remember, we need a higher low breaking past previous highs for the bull trend. We need lower lows breaking past previous lows, breaking past previous highs, breaking past previous lows. Notice how we had a double bottom, but then we didn't break past previous highs. Now we had a double top, but then we made a higher low, but then we made a lower high. Notice how it's getting confusing here, right? It's like, oh, this is now where there's no one in control. This here is the worst time to be trading the markets. Why? Because there's no probability that the trend is going to go up. There's no probability of the market going down. We're just stuck in a sideways phase. And a lot of traders make this big, massive mistake of trading this thinking that they know the market's going to break out instead of waiting for the market to break out. And so, for example, over here, the market breaks out, then we have a bit of a pullback, and then we go for a breakout again. We want to see something like this, and then a pullback like this for the trend to start, for us to jump on the trend. If you're getting in this here, there's a really good probability that most of the time you're going to get chewed up, because it's probably not going to go up a lot or down a lot. You're probably going to get stuck sideways, and you're going to get stuck just being frustrated. Always wait for the market to tell you, okay, now we're starting an upward trend. Now we're starting that. All right. So in this case example, if we did have a sideways market like this, we want to either look for a nice little higher high, higher low, breaking past previous highs, which is now what? Starting a new bull trend out of this sideways phase. Or we want to see the breaking down and then make a lower high, breaking past previous lows, which is now starting a downward phase. That this is the best time to be jumping in, because the market is now starting a new phase, and it's massive high probability that now we're starting, in this case example right here, we're starting a bull trend or a nice bullish move. Now there's a probability the market's going to go up. Or we're starting a bear trend, or the bear is in control, bearish, which means sellers in control, and now there's a probability the market's going to go down. Makes sense, guys? So I really hope you enjoyed today's free training. When it comes to that, make sure you watch this video a few times if you have to, because we did go through a lot. But guys, I promise you, most people out there are complicating this way too much. Mastering this one thing is literally 80% of your success in the markets when it comes to understanding. If we can just wait for someone to be clearly in control, nice clears, highs and lows, upward trends, downward trends, and so on and so forth, then we have a much, much, much higher probability of jumping on a really good trend. So let's get straight into the training now. What I want to walk you through is obviously a bit more of just a diagram. I'm going to walk you through here. And then I'm going to actually bring up a real chart. I'm going to show you exactly how this works in the live market so you can see what's going on. Now, every single video would have been building on each other, right? So video 1 was the biggest mistakes. Then video 2 was the trend analysis, which is the most powerful chart reading or trading technique. Yesterday was using trend analysis again. And today is also using trend analysis. That's the reason why you understanding this sort of highs and lows is the most important thing. Again, if you watch these videos, you understand what I'm saying through there. But let's actually recap some of the videos that we've actually talked about here, because it all ties into the power reversal method. In an upward trend, what do we have? We have higher highs and higher lows breaking past previous highs. Higher lows breaking past previous highs. Higher lows breaking past previous highs. Make sense? So every single high is making higher lows. So in an upward trend, the most important part to an upward trend is a higher low. As long as the market's making higher lows, then we are still in an upward trend. Now, what do we have in a downward trend? We have what? We have lower lows, lower highs breaking past previous lows. Then we have a lower high breaking past previous lows. Lower high breaking past previous lows. So as you can see, in a downward trend, what do we have here? We have low. The most important part to a downward trend is having a lower high and then breaking of the low. Lower high, breaking of the low. Lower high, breaking of the low, because that means now we're in a downward trend. So the power reversal method basically puts these two together. So from there to there, if I just drew something like this, actually, you know what? Let's actually do this here. Let's just say, for example, the market went up like that and we had something like that going, right? And then the market did something like this. Now, let's have a look at this here, right? So you can see how we went from a bull trend, the market's higher lows, and then the market rallied up, went sideways for a bit, and then dropped back down. Where did it drop down to? Let's have a look at this here. So let's actually bring up, you know what? Let's bring up this one here. It dropped where? So there, right? So is that a higher low? It's not, is it? So we went from higher lows, it rallied up, it came back down, and then guess what? It did what? It actually broke the low. So that means the buyers are no longer in control. Now, this is now a warning to say the sellers may be coming in control, where we went from an uptrend, now we may be going to a downtrend, and this may be the big top pattern before we start a big move down, and potentially even a sharp move down. So what do we now need? We need what? In a downward trend, we need our lower high, breaking of the low. And so once we've got this lower low is now a warning sign to say, hang on a minute, the bull trend is now over, because we're not raising the prices anymore. They're not making higher lows anymore. Then we made a lower low. Now what we need is we need the downward trend, don't we? We need now a lower high and then breaking of the low. So as soon as we make this lower high and then we break this low, that's now confirming we've now gone from an upward trend. Now we're starting a downward trend, at least in this phase at this particular point in time. Makes sense? So what I want to do right now is I actually want to bring up a real chart for you and show you exactly how this looks actually on a real chart, so we can see see exactly how it all works out there. So here we go. This is what we're looking at here. As you can see, it's actually a real chart that you're looking at right now. It's actually a live chart. And what we can see here is what we're looking at here is we're looking at obviously simple trend analysis. So look what happened here. We did what? We ran up. We made a high, we made a higher low, and then we did what? We broke past previous highs. We ran up, made a low, made a high, broke past previous highs. Ran down, made a high, ran up, broke past previous highs. So as you can see, see how we're actually in a very nice, big higher low, and higher low. So what the market is an upward trend. So at this point in time, we cannot be guessing or hoping that the top's in. We don't know. We can't pick the exact top. But look what happened here. What happened here? The market dropped down to create what? A lower low. So we went from making higher lows to now making a lower low. Now remember what I said before just then, right? We now have a lower low. This is now giving us a warning sign that the sellers may be coming in and we may be getting ready for a downward phase. But what do we need? We need to see the market rally up to give us a lower high. And then we need a run down through there and then breaking of the low. So as you can see, as soon as the market broke here, that there was now the point where the market's topped out. This is now what we call the power reversal method. You can see market's topped out. At this point in time, you would not want to be long this particular stock or this particular market, whether it's a crypto market or stocks or futures or whatever. You would not want to be long here. This gets a big X marks the spot if you're long here. Why? Because the market is saying, hang on a minute, we have now changed. We went from higher lows to a lower low to a lower high, and now breaking of the low. Sellers are in control, and as you can see, we've just now had a very big strong sell-off overall, and now we're going sideways through here. And again, this is just taken from the live market, and we're probably going to do something like that soon, because now guess what? Who's in control? We went from higher lows to now lower high. There's probably going to be another lower high here soon, and then we're probably going to roll over and do something like that, something like that. See that through there? So this is what we call a power reversal to the downside, where we actually see how it's actually topping out. We can't get the exact high, but as you can see, it was this point through here that we could start to say, hang on a minute, if I'm long this stock or long this market, the market's now changing, and if the market has a very good probability, especially when we started to get this here, it was right there, lower low, lower high. As you can see, that point right there was now the point where the sellers definitely now we started making downward trend. And no wonder we now got a big flush down, and then we're probably going to do something like that soon, because now the trend's gone from up. We've now peter out, and now we're going to the downside. Now let me show you a downtrend to an uptrend example. So the reverse is true, right? So now we're looking at an example of a downtrend to an uptrend here. And let's actually bring this down just a little bit more so we can get a real good look at this here. There we go. And let me just bring this down through to here just a little bit. There we go. All right, there we go. All right, that's a lot better through there. Cool. All right, so again, this is just a real example, a real chart example. But look what's happening here. What do we have here? We had a move down, rallied up. What? We made a lower high and then ripped back down, didn't we? And then another lower high and ripped back down. Another lower high and we ripped back down. So we're in a what? We're in a downward trend. But look what happened here. Look what actually happened here. We then rallied up and did what? We rallied up and we created this high here. This is now a what? A higher high. So we went from lower high, and a lower high to now a higher high. What is that? That's higher high is potentially upward trend. So now this right here, this higher high, we're not making lower highs anymore. So the market may be running out of steam on the downside, and we may be changing trend. We may now be going through what we call the power reversal method from a downtrend to an uptrend. Now in an upward trend, what do we need? We need move up. We need a higher low breaking past previous highs. And as you can see what happened here, we had a pullback. The market paused there. We then rallied up. And as soon as we actually broke that high point, which is right there, look what's happened ever since. Bam, right? The market's continued up. Now it's going flat. We're probably going to do something like that again soon. Or we may pull back a little bit to get a lower high. But who's in control now? Low, higher low. See how the trend's changed. So if you were short this market coming down, firstly, if you were long here or here, and the market's going down, you now know why, right? Because you're trading against the trend. You're fighting the market. But then suddenly, if you were short here, and then suddenly you started to see something like this, you're like, hang on a minute. Now the market is completely changed, and now we've gone from a downtrend to an uptrend, which is a lower high, and then we rallied up, made a higher high, higher low, then breaking past previous highs. From this point here, we went from a downtrend now to an uptrend, and as you can see, the whole tune changed. So even if we did get from here in this market, even if we did get a bit of a drop down through here, who's in control? Low, higher low. This is probably going to hold here and probably going to rally back up again like that. Why? Because we now have an overall low, higher low, and there's probably going to be another higher low because the trend has now changed. And if you're hoping or guessing or trying to work on guesswork or trying to hope that this is now the top, if you're short here, this is now the top and the market's definitely going to drop down through here, it's important to be focusing on what the market is telling you and not what we want to do. This is the biggest thing you can learn as a trader. In my last 16 years of trading, the biggest thing for me is to continue to listen to this. If I am short this market through here and I start to see this point through here, I am now trading against the big boys, right? The big boys push this market around, not us, but the big boys. And the big boys are telling us what's going on. And then if the market starts to rip up like this and then start to do that and you're still short, well, then it's not likely to work out. So guys, this is what we call the power reversal method. And it's amazing. And all it comes back down to is just listening and reading the markets all the time. And that's why I really suggest you, if you're looking at the markets, try to have a screen where there's nothing in the background, where there's no lines or no diagrams. Have no code here. As you can see, there's nothing in the background. A blank screen, and just have black bars, because we're trying to do what? We're trying to read the lows. We're trying to see the lows and highs to get a really good gauge on what's going on with this market, so we can see who's in control. Are the sellers in control? Are we in a downward trend? Are we in an upward trend? And so you can see that. So if you are short and the market's an upward trend, well, you know you're now trading against the big boys, and it's probably going to be, you're probably going to have a really high probability of being stopped out. Hey traders, John Howell here. You're going to absolutely love what I got planned for you today when it comes to your training. But first I want to share with you an Inner Circle coaching program testimony that I got. This particular person was with me for quite some time, and what he did, he said is that because he actually become an Inner Circle coaching client, he said, I really wanted to thank you. I'm in your private coaching since about 1 month, and I did my very first trade with this strategy, and finally with my entire trade, I earned the whole payment back. So just with one really good trade, he earned his entire payment back for the entire Inner Circle coaching program. So this is what I want you to do right now. I want you to watch this entire training all the way through, take lots of notes, and start to use what you're going to get in this free training that I'm going to give you today. And once again, you can see here that this Thomas just made all his investment back just in one really good trade. So watch this entire training all the way through, and then click on that Inner Circle button below and go check out the Inner Circle and grab one of those limited spots available. Speak to you soon. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Traders, the indicator that I like to use, which is just one indicator on the chart, and it really helps you with identifying which way you should be looking to trade. Should you be looking to trade long, meaning you want to profit from the market going up, or short? You can actually make money from going down as well too. So the number one indicator that I like to use on any chart is a moving average. So the moving average that I like to use, see this blue line through here? This is what's called a 52 moving average. Now, it doesn't matter what time frame this is. I'm going to share with you exactly why it doesn't matter what time frame this is, but whatever chart you're looking at, this could be a daily chart. And so therefore, if I go to my edit and my settings, you can see here that we have 52 as the period, and then I've just got a blue there because I like the color blue. So that is the very first thing that I want you to put on the charts. And what this does, there's actually two things that I use this for. The very first thing that I use this for is that if I squeeze my charts up now, notice I'm squeezing my charts up, notice what happens. Notice that when it gets too far away from the moving average, too far above, too far below, too far below, too far above, guess what happens? What ends up happening? It comes back to the moving average. And so that's the very first reason why I like using a longer term moving average, like a 52. You can use a 10 or a 9 if you want, or a 20, but I like to use a bit more of a longer term. So that's why I like to use the 52. So the very first thing that I like to use the 52 is when I'm looking to trade, I'm asking myself, how far away are we from the moving average? It's the very first. Because if we're too far away, just like down the bottom here, guess what? We're too oversold, and it's like an elastic band, and we're likely to come back. Are we too far above it compared to the average price? If so, we're likely to come back. You can see from there, even the stretch from this point here, and it comes back to it. So whenever I'm trading, the very first thing I'm asking myself is that if I'm looking to, say, go long, all right, I'm looking to go long in the markets, and if I'm looking to go long, but I can see it's, say, for example, right up here, and I can see that it's actually pretty far away from the moving average compared to this point here, and this point here, and this point here, and so on and so forth. If I can see that this is quite the maximum distance away, well, I know we're getting into that overbought territory. And so therefore, if I'm going to take a long trade, meaning I want the profit of the market going up, I'm now putting the odds against me, because I'm now trading, I'm now getting in an overbought territory there. So that's the very first thing that I like to use with the used moving average there, is where is the overbought and the oversold territories. So the second thing that I like to use when I'm looking at the 52 moving average on the charts, and again, there's nothing special about the 52. It's just one of my earliest mentors really, he really sort of, this is the moving average that he likes to use. So therefore I've used it, and I've just stuck with it ever since then, because it's really helped me as well too. Now, moving on now through to the second point of view, right? The second thing that I like to use the moving average for is the direction of the moving average. Okay, the direction of the moving average. So if I open up my chart a little bit, the overall flow of the moving average is like a stream. Okay, and that stream has momentum. So if we see, if think about us as like a surfer, okay, we're a surfboard, and if we've got a surfboard, but we go out and we go look at the ocean, we go look at the rip and the tide and so on and so forth, but then all you see is just that. Are you gonna try and go out there and try to catch a wave? You wouldn't, right? Because it's flat. There is what we call flat momentum. There is no momentum that's going to pick you up and take you to the promised land, so to speak. So, but just say you did that, but then just say, for example, you saw that there was a really good strong current, strong rip, and it was streaming up like this, right? It was streaming up like that, all right? And this is called just a wave. Now you're a surfer. Now you're like, yes, I'm looking there. I can see there, right? So what the surfer does is he paddles out through here, right? He paddles out through here, and he looks to come down into here. He looks to jump onto the wave, and then guess what? And the wave then takes him up. Makes sense? So all that is we're like the surfer. We're waiting to make sure that there is good, strong momentum. So therefore, if we're looking to get into a trade, that we have a good probability of the momentum taking us. A lot of the times traders will get into the markets, but when the moving average is flat, meaning there is no momentum in the markets, they get in and the market doesn't move anywhere. It doesn't do anything. And they're wondering why the market is not going in their favor. So what I like to do is when I'm trading, I like to use the moving average when the market is trending up. And notice this here. Notice how we actually had a very strong trending moving out. Look at all of that strong trend. See how it was very strong on the upside? Look at this here. Every time we got a pullback, nice bounce, bouncing. Look at that there, bouncing up and then bouncing up, right? There was a lot of momentum pushing this back up. So every time we got a bit of a pullback, it bounced up even through here, right? It bounced up and it bounced up through there. So by looking at that, by looking at the direction of the moving average, we can see that for me personally, I like to trade when we have a strong trending moving average, because there's strong momentum, and therefore the momentum, just like the surfer, is if the stronger the momentum, the stronger the move is likely to be, right? If you have a really good strong wave and the surfer jumps on that, it's now likely to carry you to the promised land, so to speak. So therefore, for me personally, I'm always looking for trades that do that. Now, when it comes to the exact setup and the exact entry point, in a couple of days time frame, I'm going to share with you exactly all the details to my system. But I wanted to share this with you first, just so you can go to your charts and then start to actually have a look at it and start to actually see this. Now, if I bring up an example of a downtrend, look at this through here. All right, look at this, and this is where it becomes really interesting. And I'll bring this up through here. You can see how we actually had a very strong moving average. Look at see, very, 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 very strong, wasn't it? And therefore we had a very strong current. And then look what happened. Notice how we actually we started to flatten out through here. We didn't have any strong trend, did we? We didn't have any strong momentum. The moving average wasn't strong trending up, so there's a lot of momentum up. Then we started to flatten out through here. And guess what happened? And guess what the market did? The market did absolutely nothing. This is the worst time. This gets a big X, right? A big X. This is the worst time. The worst time to be trading. Why? Because there is no momentum behind you. But then guess what happened? The moving average started to what? Started the strong trend down. And now look what happened, right? We started to actually have very big moves on the downside, very big moves on the downside. So we went from a strong trending momentum to the upside. This is when you get the moving average like this is where I'm looking for long setups. And again, in a couple of days, I'll teach you all the details to the exact setup using the moving average, what type of setup I'm looking for, what's the entry point, and so on and so forth. I'll teach you that in a couple of days time frame, but I wanted to share this with you first because it's an advance, but it's very, very, very simple of the two areas that I'm using this for. Remember, remember the step number one is how far away are we from the moving average. So it's giving me a warning sign if I'm looking to get into the trade. But then also, secondly, I'm looking for the direction of it to actually see this here. So it's actually a real high probability to try and look for a long setup here. And let me just do this here. So as you can see and you can even see, look at this here. Look at this here. Notice how the moving average was flat through there. What happened to the market? Nothing, right? So if you're looking to go long here, it's like you're jumping into a river and it's like, oh, why aren't I going anywhere? I'm just sitting here, right? That's the reason why it's not a good idea to trade here. It's a good idea to, when the market starts to pick up, as you can see, we start to get a very strong moving average. I'm looking for long signals through here. Why? Because we have a strong moving average. Then we go through a period of what? Flat moving average again. Therefore, this is actually a not a very good time. Guess what happens to the market? Market did absolutely nothing. Then it started to shift trend on the downside. And now the downside has a strong shifting momentum on the downside. And then guess what happened? Then the market started to strongly step down. So now we've got strong momentum on the downside. So two things, once again, just to recap this here. And I want you to go check this out on your chart to be able to see it as well too. Is that whenever we have a good, strong trending moving average, there's a lot of momentum behind that. And so therefore, they're the type of trades that I'm looking to use myself. So go to your trading software right now, add the 52 moving average to it. You'll be able to see, you'll be able to test it all out. And in a couple of days time frame, when I share with you all the details to my trading system, I'll share with you exactly the 52 moving average. I'll share with you the exact setup I'm looking for, the exact entry candle, and so on and so forth. So I hope this helps you out today, guys, and I'll see you in the next video. Hey traders, John Howell here. I'm really excited to share with you today. It's something I'm going to be sharing with you today that's really going to help you when it comes to understanding the numbers about and why most people stuck at trading and why you're over trading and how you can actually stop over trading and how you can actually do really well with actually quite a smaller number of trades. I'm going to share that with you here, but I want to share a inner circle testimonial here first, and then we can get straight into today's training. So this is actually from Chris. I actually got this recently, and he said, firstly, dear John, I want to thank you from the bottom of my heart for your amazing education and teaching last year. I've gone through it in January, and he said what he said is he just trades the system on the actual on the actual SPY index, the system that I teach. You can see all the different days here, but the one thing I just want to zoom in on the bottom here. And he said here, 2 losses in there, all the rest are winners. Total for 13 days is 21,268. Again, here's an inner circle member. Now, again, he was actually with me for about 6 months of in-depth training, and then he came out of the gates and he started just cracking it, doing really, really well, right? So thanks for all your help. There is no way I could have made this happen without your amazing course and support. So many times I felt like giving up, but you were there because I'm there in the inner circle. I'm there every single day, coaching and helping them to never quit, and that was huge for me. I'm so excited about my family's future that I can't sleep at night. Thanks again, and God bless you. So that's actually from an inner circle member. So what I want you to do right now is watch this entire training all the way through. And then what I want you to do is I want you to click on that inner circle button just below, and you'll be able to see, again, from these testimonials I've been sharing with you for the last couple of days, you'll be able to see all the details there. So grab one of those limited spots on the inner circle. So enjoy today's training, and then click on that button and go check out the inner circle and grab one of those limited spots, and look forward to seeing you in the inner circle. Don't place a trade based on what you're seeing in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. I've got 10 doubles here, but if you did do 10 doubles, what would it be? But let's actually start with 7, okay? Here's the thing. I realized that me trading a lot when I first started trading, it was actually stopping me from moving forward in a big way, okay? Because I thought I had to, remember I said before, I thought I had to actually trade a lot to make a lot of money. But when I simplified the process, my mentor said to me, he said, John, you've got this all wrong. You actually don't need a lot of trades for you to do really well. He said, what's your outcome like? What do you want to do? And I said, well, I want to make 6 figures, because at that time, I think I only had maybe a $5,000 or $10,000 trading account to my name. He said, okay, cool. He said, well, do you realize that even if you only had $1,000, that if you knew exactly what to look for, right, and you had some really good high quality setups that you can trade, that you're only 7 trades away from doing 6 figures. And then he said you're only 10 trades away from becoming a millionaire. And I'm like, what? Say that again. So this is what he shared with me, and this is the big thing that turned me around from $250,000 in debt and almost facing bankruptcy to becoming a full-time trader. Because instead of me trading every single thing that I thought was a good idea or looked like a good idea or I heard or a tip or so on and so forth, I just slowed down and make sure that I took some really good trades. And so it's called doubles. Doubles. Here's the thing, is that when I'm trading, what's made me so successful in the markets is I'm just looking for opportunities that has a really good high probability, right? There's no certainties, but a high probability of doing a double, which means 100% return. Now, it's important to know what to look for. And again, in tomorrow's training, I'm going to share with you exactly my number one trading system, so you know exactly what to look for. But I'm trying to give you the concept here, so you can be more like a laser, more like a shooter approach, sniper approach, instead of just trading willy-nilly, right? We have these really good high quality setups that we can slow down and we can do really well by waiting for the right approaches. So here's the thing: you're only 10 doubles, right? Seven trades to six figures, 10 doubles to much bigger there. So again, we're looking for high quality setups. And if you had $1,000, again, just starting with $1,000, and you placed that $1,000 into a trade, and you knew exactly what to look for, and it had a high probability of doing 100%, that would be 2,000, right? So 1 into 2. Trade number 2 would be 2 into 4, right? Because it's a double, it's 100% return. Trade number 3 would be 4 into 8. Trade number 4 would be 8 into 16. Trade number 5 would be 16,000 into 32,000. Trade number 6 would be 32,000 to 64,000. Trade number 7 would be 64,000 into 128,000. So once I understood this, I'm like, so by me trying to trade every single thing in the markets and making all these mistakes and getting in the wrong time and listening to all these big tips out there and all this sort of stuff, I realized all I need to do is focus on, okay, what is the type of setups that's going to give me the best chance, right? There's no guarantees of actually making a double every single time, but what are the setups that's going to give me the best chance of doing the doubles? Because if I can know what to look for in a setup, well, then I know I've got the best chance of actually, doing really well. Now, sometimes it might take you more than 7 trades, right? Because you might have some small losses in there as well too. But what's going to give me the best chance of actually doing this? And then again, in tomorrow's training, I'm going to share with you exactly what the setup is and how to actually do that. But today is more about giving you the concept of the big picture, where we don't need to be trading a lot. We just need to know exactly what are the setups, and then the patient word comes involved with it, right? The patient, which is we just need to be patient and waiting for these setups to appear in the markets. That's what real trading is all about. But then if you want to go from millionaire status, well then guess what? We continue to go, right? We double that again. So 120 goes into 256, into 512, into over $1 million. You are literally only 10 good quality trades starting from $1,000 into $1 million. Now, let me ask you a question. What if you spent the next couple, I'm gonna be teaching again in tomorrow's training. I'm gonna teach you exactly what I look for in a good trading setup. But once I understood this, and then I learned the trading setup I'm going to share with you, then once I started to focus on this, everything completely changed for me. Everything. I stopped going from this broke, almost bankrupt person to becoming a full-time trader. And that's how I became a full-time trader. Not because I trade a lot. No, I'm more like a sniper approach. I wait for really good, high-quality setups because I don't need to trade a lot when you start to do this sort of stuff. And what happens over 1 year, 2 years, 3 years is that you start to build this foundation and you start to get these really good wins behind you. And remember, this is just going off 100%. Wait till you see some of the setups I'm going to share with you in tomorrow's training that, some of the setups can just, do a couple of 100%, 500% return. I've had trades that have given me over 2,000% return. Again, in tomorrow, I'm going to share exactly all of that. But right now, today is all about sharing with you the big picture. And the thing that's stopping you from achieving your financial goals, whether it is 6 figures from the market, even if you're starting from $1,000, is knowing what to look for. So the big picture here is I understand this, right? The thing that's going to stop you is you going outside the box. What's outside the box? You just trying to look for that hot tip or trying to trade every single thing that moves. Instead of having a good plan behind you, a good setup, and then waiting for these setups. And then over the next 1, 2, 3 years, you too could be doing $1 million, right? Or at least becoming a 6-figure trader, which means you make $100,000 starting from small. But it all starts with your education of knowing what to look for and then applying that in a really good sort of a sniper approach. A sniper approach is that you sit there and you're patient and you're patient and you're patient and you're patient. And then when the setup comes around, you're happy to trade it because you know you have a really good high probability of doing what we call 100%. Now, as I said before, not every trade's going to do 100%, right? But this is just an average here. Even if it took you 20 trades, 30 trades, even if it took you 40 trades to doing $1 million, or even if it took you 20 trades, maybe more than double to eventually get to 6 figures. That's only 20 trades. Imagine over the next 12 months of you doing that. Once I understood this, it completely game changed for me for when I actually started to actually trade the markets and trade this here. And again, when I started to do this, that's when my income exploded because I dropped the amount of trades I did by like 90%. Well, actually, it was actually by 95%. 95% I traded less. And then my income exploded because all I did was just to wait for these really good high quality setups. So that's what this is all about. Again, in tomorrow's training, or if you're lucky, there might be a button that's just appeared just below this video. You'll be able to get like a backdoor access to my training. And on that training, I'll share with you exactly what the setup is, how I find these trades, the software I use, and all that sort of stuff as well too. So again, make sure you check your email tomorrow, or if you're lucky, there should be maybe a backdoor access to get access to that training. Just below this video. So I hope this really helps you out. You are so close to becoming a really good trader. Now you understand what to look for. Now let's take it to the next step of seeing what are the exact setups I'm looking for. So in 6 months, 12 months time frame, we can start to really supercharge our results. I'll see you in the next training. Hey traders, it's John Howell here. Today, what I want to do is I want to share with you a pretty powerful pattern that you can look out for when you're trading that just works amazingly well. Plus also I'm going to give you a bit of guidance on how to actually cut your losses short and let your wins run. So let's go straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, let's get straight into this pattern here. Now, let me give you a bit of a background on this pattern here just for a minute, okay? Now there's a lot of the times the market will be just going sideways. It won't be doing much. This is actually a pretty powerful pattern, okay? Look for this pattern because it's just amazing. So a lot of the time, or sometimes you'll see the market, it won't really do much, okay? So what I mean by that is this, okay? So sometimes you'll see the market, it might come back down, it might bounce, it might do something like that, it might come back down, it might just go sideways, right? And then to do something like that. You might see a period where the market is just going sideways, not really doing much, okay? So here's the really powerful thing. Sometimes when the market's not doing much, let's say for example, this is a big downward trend, okay? Where really we've been doing this sort of thing. We've been coming down, we've been in a bit of a downward trend and then suddenly we just started going sideways through here overall. Not really much going on. And then suddenly what happens is we have this level here would be what? That would be major support level, okay? And this is actually a very I love trading setups like this. And if you'd like to learn more about my #1 trading setup and how I trade the markets and how I scan the markets to find powerful setups just like this, then go to johnsfreetraining.com, JOHNS, johnsfreetraining.com. I've got a free training that goes for about, 80 or 90 minutes. And I walk you through everything about my trading system and how I find it and so on and so forth. So go get access to that now. So what happens is this is actually pretty powerful. Firstly, what happens is that the market actually breaks support, okay? It actually comes back down and it breaks support. We're in a bit of a downward trend and we go sideways and not much happens. Now this is where it becomes really, really, really key. Okay, it breaks support, but we don't follow through initially. And what happens? We have a strong move down, but then suddenly we have just this very, what we call small bars, small bars, and it rallies back up towards the resistance line. Watch for these pattern trades. I tell you, if you just trade this pattern alone, you'll crush it in the markets, no matter what market you're looking at. Okay, intraday charts, whatever. Okay, yeehaw, let's go. So you're seeing that, and the market breaks support, and it has little bar, small bar, small bar, small bar, and it's in a downward trend still. Okay, so we're still in this downward trend through here. So we're still in a downward trend, and then the market breaks. But when it breaks support, it actually starts to have all these small little bars coming up. It means the buyers are struggling, and then suddenly out of nowhere, a continuation of the trend, we get a very large bar breaking down like that. Very big, large bar. What does that mean? Here's the thing. Small bars means no one's really in control. We're not getting big dominant buying move. We're not getting big dominant selling move. Okay, so there's what we call no one in control in this market here. Make sense? So if no one's in control in this market here, then what happens is that as soon as we get a big strong dominant bar on the downside, guess what? That means that there's sellers in control. Makes sense? And so then we see this here. Okay, we see this here. This tells us right now that there's a massive probability we're going to be heading down like so. Okay, we're going to be heading down like so, like that. There's a massive probability that this is going to be a really successful trade. Now, there's other things you can overlay it, and I'll talk about that a bit later on. Actually, on that free training I'm giving you, I talk about how to take this setup like something like this and then overlay something else with it to give it a massive probability of making a big move. But I'll just keep it simple right now. This is what you want to see, right? So the first thing is breaking of support, a small little rally up, and then a breaking, okay? And then you want a strong bar breaking down, showing us that we have confirmation that the market is now there's now massive probability we're going to continue down and have a very nice profitable trade out of that. And if I go back and have a look at this chart here, okay? So we're looking at this chart right now, and it doesn't matter what chart this is. It could be any chart, okay? There's two different moving averages on this screen here, and I'll explain the reasons why. I use really three moving averages. You guys have seen it, the 52 moving average, the 20 moving average, and the 9 moving average, okay? I've just always used those myself. So, but forget the moving averages for a minute, okay? If I just actually, I'll just forget the moving averages for a minute, but notice what happens here, okay? Notice what happens here. What see happening is, see how the markets come back down, and then suddenly we just started to really go sideways through here. And then really, this actually was as you can see, this is actually a major support level on this particular stock at this particular time. And so we had a major support level, look what happened. And then look what happened. It did what? It broke down. It rallied up, small bars, struggling. And then guess what happened? And then small bars, see how it's still struggling? It's still struggling. And then still struggling. And then bam, let's see if I can get that bar. Can I get that bar like that? Oh. Do any of you guys use TC2000? How I can just go? That's the one thing I don't like about TC2000 is I just can't go to the exact bar. All right, come on. All right, software is actually breaking on me. So as my software is doing its thing. So the big thing here is, oh, there we go. All right, let's go back to the bar now. There we go. Come on, bar. Bar one. There we go. All right, let me just go one bar. Where is that bar? Come on. Can I get it? 1, 2, 3, 4. Oh, I'm not going to get it. Okay, cool. So let's actually just do this here. All right, I'll put this down through here. So here's what it looks like, right? As I said before. So what happens is we got a big downward trend. We have a high, lower high, lower high, lower high. We broke this key level of support. See how we rallied back up with small bars? And then suddenly we broke down with a large bar. This here tells us that there's a massive probability, that we are going to generate a really nice profit on this trade here. And look what happened here. The very next bar actually ran down. Now, just use this, guys, right? Use this. This actually happens for the bullish side as well too, right? If you flip it upside down. Let's see if I can do that. If You know, it also looks the same for the bullish side as well too. If I just, let me take a screenshot of this, and then what I'm going to do is I'm going to then just see if I can just, let's see if I can just flip this on its head. There we go, like that, right? So that's exactly what it looked like for a bullish setup. It's the exact same thing. So whenever you're looking for this, wait for good significant support or resistance, slow, small pullback, and then a very large buy breaking out. It's super, super, super powerful. Now, I did promise you I was going to give you a bit of an extra little tip. And the tip is, if you're trying to scale out, if you're trying to let your profits run and cut your losses short, then use a simple, use a close moving average. It could be whatever moving average, right? I use a 9 moving average. Now, I don't always use this. Okay, some trades don't allow for this. Sometimes I'm only in and out the very next bar. It's what I call the short-term trade. Again, on that training, I'll share with you what I call from a short-term trade, and then from a big profitable trade as well too. But this one here had the makers of being a big profitable trade, so we used the 9 moving average of getting out. And as you can see, look what happened there. It actually went from 20 all the way down to, now this again, guys, this doesn't happen all the time, but there's setups out there that's going to happen again like this. Okay, so you can see, look what happened here. We got a literally a 60% drop in the markets in roughly about a month there, but using the 9 moving average and just staying in and staying in and staying in. So use this, guys, in your trading. I promise you that you're gonna kick butt and you're gonna take names. You're gonna kiss babies. And I promise you, if you just stuck to this one setup alone, you won't get many setups. But come to me in 2 or 3 or 4 or 5 years and tell me you are not absolutely crushing it in the markets. The other thing I do say, traders, is that the hardest thing about trading in general and things like what I'm just talking about here, the number one hardest thing that you're going to have is that you won't get this setup today or tomorrow or next day, or it might be a week without a trade. And then guess what happens? Then you start to take all this other bullshit, which causes you to go backwards. But if you just stuck to, because your whole thing about trading, right? This is one thing that I had to learn about the fundamentals to becoming a good trader. Which was, it wasn't the market that never got me, right? It was always me that got me. And what I mean by that is that I always thought my thinking was getting me. My thinking was, oh, well, I make $400 a week right now washing cars, which I did at the time. Right, when I started trading the markets, I only earned $400 a week washing cars. So I thought, okay, well, I need to earn that to replace my income. So I've got to trade every week to make $400. Otherwise, I'm not going to replace my income. So therefore, having that mentality, guess what? Actually caused me to go backwards, because if there wasn't a trade setup that met the trading rules that I knew had a massive probability of working out, then guess what? Then I would take all this other crap and it would cause me to go backwards. But if I just stood back and just waited for really good quality setups, yeah, there might be maybe 50 months of the year, or maybe 50% of the months of the year I don't have any trades, but 50% of the months I do have trades. I'm just throwing numbers out here. If you trade intraday, you're going to have trades every single month, right? But the thing is that if you take those trades, you're likely to do really, really, really well. And if you're trading things like options, do you realize this trade here with using options, and if you just use this strategy, you'd be up 1,000+%. That's like turning 10 grand into 100 grand, just one trade. You see what I'm saying there, traders? So just one really good trade throughout the entire year can make probably double most people's salaries, in just one really, really good trade. And they do come around. That's why it's being consistent, but also knowing what to look for. So go back and backtest this, guys. I promise you, you're going to rock out with your sock out, and you're going to crush it. Just be patient, wait for these setups, and you're going to have an amazing trading career.